Hello, this is Steve Sanangelo from the SRS Rock Report. It's been a while since I've done a public YouTube video, and those who follow my work at the SRSRockReport.com website, I continue to mainly focus on gold, silver, the miners, and not only how important energy is for the global economy, but energy actually gives assets their value. And if that's the case, well, we have to kind of consider Bitcoin, because not only does Bitcoin consume a massive amount of energy, there's a lot of people investing in it. So today I want to talk about silver versus Bitcoin, which is the better store of value. Now, the debate is going to continue because some people rather invest in physical metals like silver, others want to invest in Bitcoin, and some do both. But today I want to provide my objective analysis why I believe silver is the better long-term store of value investment. Now, this is only one report. I've got more reports coming out. Now, if we look at this first slide, this shows cumulative global silver coin and bar demand, and that's in the blue bars, 3.8 billion ounces the market acquired since 2008. It's been about 850 million ounces of silver and ETFs. If you put it together, it represents about 140 billion of silver investment over this period. Now, that sounds like a lot of money until we compare it to the Bitcoin market. Now, this is just one aspect. This is the ETFs, right? They came online, a lot of them came online in early 2024. So at the peak in 2025, in January, the ETF market for Bitcoin was 104 billion. It's come down since then because the price has fallen. Now, we have to also consider MicroStrategy, because Michael Saylor, since the beginning of 2024, has added 310,000 Bitcoin to MicroStrategy's holdings. And if we look at the red area, I looked at it, and total Bitcoin mine supply from 2024 to February 2025 was 300,000 Bitcoin. So just Michael Saylor, MicroStrategy, acquired more Bitcoin than the global mine supply. I think people really need to understand that. Now, if we put it together, this chart shows total Bitcoin ETF was 104 billion. MicroStrategy investment was 26.5 billion in 2024 to early 2025. Now compare that to world silver mine supply was about 26.7 billion, and total investment, physical investment, was about 9 billion. So we could see here that there's been a lot of money moving into Bitcoin. So if you take total silver bar and coin demand from 2008 to 2024, it's about 115 billion. And total net ETF investment is 26. So it's very similar. The ETFs for Bitcoin of 104 billion and MicroStrategy's 26.5 billion, just in that period from 24 to 25, represents the same amount of buying of all silver investment since 2008. So it's important to understand what's going on with Bitcoin. Now, one of the negative factors about Bitcoin is its volatility. And if people have been investing in Bitcoin, they understand this, because Bitcoin has a very high price, right? It reached about 109,000. Well, in just about 6-7 weeks, it fell 28%. Usually very large numbered assets don't fall this kind of volatility, because even silver, now silver reached a high in October last year of $35, and in about 2 months it fell 16%. Looks like a lot, but it's only 16%. And silver is more volatile than gold, because if we look at gold back in November 2024, it fell 9%. That was its move from about 2,800 down to 2,550. And this current correction is 4%. So it just goes to show you, with Bitcoin at a 28% decline in just 7 weeks, a lot of people, that they find that very problematic to invest in something that's that volatile. Now, one thing we need to consider, Bitcoin tends to trade with the NASDAQ. It tends to trade less of a store of value and more of a high-tech stock, because the purple area is Bitcoin, and it's moving in line with the NASDAQ. Now, I want to talk about this because one of the things that Bitcoin investors continue to look for is the bull markets, because they think that we're going to see another breakout in Bitcoin compared to these past eras. The first one is in blue, the second one's in orange, and then we have the green one. But look at the red one, which is the current Bitcoin price. It's not going up as the past ones have. It's actually has come down considerably. And if we look at this chart should worry Bitcoin investors, because if you look at the past increases, this white line shows where Bitcoin should go to match other past trends. And other past trends went well above it. So the thing is, right now, with the price of Bitcoin at 85,000, it has to reach by June 2025, 350,000 for this trend to continue. That's that's quadrupling of its current price of 85,000. So I think one of the issues with Bitcoin right now, a lot of people were banking that Bitcoin was going to, let me go back to this other, they were banking that we would see Bitcoin go up to 150,000, start moving up higher. And now it's come off those highs. It's at 85. And if it does not go up to this 350,000 and it continues lower, especially if the NASDAQ continues to correct, you could see a waterfall of people just giving up. And this is bad news, because MicroStrategy has purchased a lot of Bitcoin with convertible notes, also issuing shares, and even many of the miners like Marathon and Riot, they're not selling their Bitcoin that they produce. They're holding on to it. So they may have to sell at the worst possible time when the price continues to fall. I think people need to understand that. And we saw record Bitcoin ETF net outflows. We had 1.14 billion in just one day. That was on February 25th. And we're seeing a big move out of the large BlackRock IBIT ETF, 418 million in one day. So this was kind of troubling to see this much of an outflow. Now, this is the chart just showing what I did there. This is total Bitcoin ETF net flows from February 3rd to February 27th. And if I put it all together, cumulative, it's now about 3.6 billion in just a very short period of time. So I think Bitcoin investors are concerned going forward, because in the next 3 months, it's kind of critical that Bitcoin not only moves back up in price, for it to remain on that trend, it should quadruple to 350,000. And if that doesn't happen and we continue to see weaker prices, I think you could really see a lot of people starting to sell Bitcoin. So I talk about the energy cliff, a world moving from building wealth to protecting it. And this is very important because most financial assets, and I would actually include Bitcoin because it's a high-tech digital currency, it's going to be very problematic to protect your wealth. So that's why I'm a big believer in physical metals, especially silver. Now, looking at this chart, if we just look at the physical bar and coin, which is 3.8 billion ounces since 2008, this next chart shows that it's about 115 billion in the blue bars. That's all physical bar and coin demand represents right now since 2008, 115 billion. Now compare that to the 28.2 trillion in US Treasuries. Since 2008, the US Treasury has issued 22.5 trillion treasuries. So this is a very important dynamic because a lot of people are holding on these treasuries, hoping at one time that they can liquidate those, get cash, and buy something. Well, this is going to become problematic because I mentioned this in the Silver Symposium. This BIS working paper came out with what they're known as the collateral trap. It's US Treasury debt is the foundation to stabilize the financial system, and that's what it is. But we have to remember, US Treasuries are really not an asset. They're a liability. They're a debt for the US government. Even though people hold these treasuries as assets, they do get interest yield. They're really a debt. So the problem is, at the end of this paper, and I want to repeat this again, The authors say, to be clear, the footnote at the bottom, in our model, we abstracted from sovereign debt risk, and this is the clincher, and considered treasuries as being safe assets. This is very troubling because they're just saying U.S. treasuries are the foundation of the global financial collateral because we assume that they're safe assets. Well, they're safe until they're not. And so this is another reason why it's important to understand energy, because when we start to get into trouble with energy, a lot of this financial assets and treasuries and bonds are going to get into trouble. Now, this is the last chart, because one of the problems I see in the precious metal industry and even the dealers is there's a lot of hype and people get frustrated when the metals don't get to their levels. And so it's going to take time, but this chart shows, this is a yearly chart of silver. Now, this green line is the 5 EMA, and it provides a pretty good cost of production for silver. Even though silver shot up to $50 in 1980, at its peak, according to my analysis, the total cost of silver was only $10. So the margin was very high. It was only a 48% cost compared to the average price, which was $21. That was the average price of silver in 1980, $21. So the cost was very low. Then as the oil prices fell, demand kind of subsided. We see in 1995, the market price was about $5.20. The cost was $5. Then we see in 2012, it jumped up again. In 11 and 12, it jumped up. The average price for silver in 2012 was 35. The cost was 20. So it was a 50%, 57% cost to the market price average for the year. The good thing about investing in silver now, the costs have continued to increase. And my analysis shows it's about 25 plus now to produce silver. Even with the $32 price, and this is an older chart, it's come down to 31, that's a 78% cost of production compared to the market price. So those who think that we could see a collapse in the silver price, the silver cost of production is the highest ever, and it gives us a floor in the silver price. So I will be providing more updates on what's happening with silver and Bitcoin, but I think it's very important to understand that silver, investing in silver, is more of a mid to long term. And there's been a lot of frustration for silver investors due to what I think is a lot of hype and misinformation. And I want to continue to put out analysis that supports investors to know it's the best thing to dollar cost average in your investments. Sell if you have to, but you have to understand it's a mid to long-term investment strategy. So I hope you enjoyed this. Have a good day.